Hello, everyone, and welcome back to SALT Talks. My name is John Darsie. I'm the managing director of SALT, which is a global thought leadership forum and networking platform at the intersection of finance, technology, and public policy. SALT Talks are a digital interview series with leading investors, creators, and thinkers. And our goal on these SALT Talks is the same as our goal at our SALT conferences, which we're excited to resume here in September of 2021. And if you're watching, we hope you can make it to that in-person event, but there will also be options to participate virtually. But our goal on these talks and the goal at our conferences as well is to provide a window into the mind of subject matter experts, as well as provide a platform for what we think are big ideas that are shaping the future. And if you've been tuning into SALT Talks over the past year or so, you've known that we've done a series of SALT Talks on the digital asset space, but we also cover sort of the traditional finance ecosystem as well, big banks, hedge funds, institutions. And our guest today sort of blends those two worlds. His name is Brett Tejpaul. He is the head of institutional sales, trading, custody, and prime services at Coinbase, which is, as you likely know, the leading company in the digital asset space. Recently went public via a direct listing. Brett joined Coinbase in April of 2020 after a 25-year career in the financial industry 1.0, as he calls it, at JP Morgan initially, and then most recently at Barclays. He's an experienced builder in financial services, working with both institutional clients and FinTech companies. At Coinbase, he's working to expand the institutional client base, build out the coverage team, introduce new features and services that institutional investors expect, and educate the institutional community about crypto as an asset class and its role within a diversified portfolio. And that's part of a mission that we share at Skybridge with what Brett is doing over there at Coinbase. In his most recent role at Barclays, he was the global head of sales. He developed large teams and incubated multiple business lines in that role. He pioneered the digital role across sales and trading, adopting new technologies and transforming existing platforms, including the creation of a digital bank prototype. So that sort of step fully into the digital asset world was a natural step for Brett as he joined Coinbase again early in 2020. I'm hosting today's talk. So again, I am a managing director of SALT and also a director of business development at Skybridge. If you're watching this, you probably know that Skybridge has substantial investments into Bitcoin, one of those institutions that's jumped on board in late 2020 in our case. But excited to be hosting the talk here with you today, Brett. The first question I want to ask is about your background. So again, you joined Coinbase in April of 2020 to help lead the institutional side of the business. At that time, Bitcoin was only about $7,000 a coin. It hadn't engaged in this sort of super cycle that we're in the midst of today as we talk. But why did you decide to ultimately make that leap? You're obviously sort of straddling FinTech and the financial system 1.0 over there at Barclays. But what gave you sort of the aha moment or the eureka moment to say, you know what, it's time to make that jump fully into digital assets?
Well, I became quite vocal about the fact that I thought towards the end of my 17 years at Barclays that technology was finally going to disrupt the trading floor. And so I wanted to do something about it, and I pioneered that digital role. I was trying to help Barclays look to the outside world instead of building everything, sort of buying it and importing outside technology. And I had some early success with that, but the more success I had, the more conviction I had to be forward-looking in anticipation of, I think, banking and finance really being fundamentally disrupted. I looked at opening an OTC trading desk in June of 18 and concluded at the time for an OTC crypto desk and concluded at the time that the infrastructure wasn't really there to support the sort of scale of trading I thought we would have and also in a quite sort of regulatory heavy environment. But if you fast forward just 2 years, I took a second look at the crypto space and I was amazed to see that the infrastructure I think had largely been solved for. So when I then said, well, what's next? And if I had this sort of super high conviction, view on both cryptocurrencies and digital assets, Coinbase was the only place to consider.
Well, it's certainly been an interesting period from the time you joined to today. Bitcoin has gone from today we're trading around 50,000 from around $7,000 a coin. I'm sure it's been an interesting journey for you, to say the least. But Coinbase, I think, is known in the public sphere more for its retail crypto trading business. So it's the dominant platform in the US for retail crypto trading across a variety of different crypto assets. But it also has a very robust institutional side of the business, which you help lead. What does Coinbase offer to the institutional community what does that institutional business look like? And what are reasons why, as people are evaluating the different options out there in the marketplace, they should look at using Coinbase?
And the high level for institutions is we have a prime platform that ties together what I think is the best trading platform, along with a qualified custodian, and then all the services that one would expect from a prime broker, like financing. And so we also have an exchange, which is operated separately. But I'm trying to raise the awareness that Coinbase can be the go-to place for institutions. When I think through sort of the top 10, if you like, reasons why an institution should consider coming to Coinbase, I want to begin with trust. It's super important. So that's that is at the top. So trust, transparency. Two, we're now a public company, right? And so last week, in fact, we had one of the world's larger hedge funds doing diligence on us for the past, sort of 5-6 months. And at the end of the talks, they said, we're really excited that you're going to be a public company because we don't want to be beholden to sort of private companies in the space. And we think that public companies are held to a higher standard. So I think that's important. Three is we're regulated. So we operate as a New York trust company. We're fiduciary under New York banking law, and we're a qualified custodian under the Investment Advisors Act. We're a money transmitter, so that means we have to adhere to KYC and AML. Four, we're secure. So the first line of defense is, of course, our security protocols, and we've got an unblemished track record in that respect. And the second line of defense is the largest insurance policy in the industry. Five, product. So we have by far, I think, the best trading platform. We can go more into detail on why I think that's the case. But I think it's second to none.
Well, we're customers of that platform, so I can't argue with you on that one, but go ahead.
Yep, thanks. We're also the largest custodian in the world. So we have $250 billion of assets on platform, and roughly 50% of that, 122 billion, is now institutional. When I started, it was actually less than 3 billion. And then C, on the product side, it's really the prime broker is a full solution. So it's important that every single thing that we do stands on its own. So you can pick and choose, you can buy here and store there. But I think I'm finding through experience that institutions want a clustered, seamless offering. Six, and this is a good one, the largest and most sophisticated investors in the world have chosen us. And so we have a long list of companies that are announcing that they've come into this space. We've been fortunate to win exclusive mandates in pretty much all the cases. And the second point I'd say is there's a long list of companies that have made pretty significant investments that have yet to disclose their participation. So I just highlight the fact that we can be trusted with confidential information. Seven, and we'll talk more about this later, is we are a business-to-business crypto infrastructure provider. So if you're a bank and you don't have native crypto capabilities, if you're a FinTech platform, if you're a challenger bank, you can come to us and ask us to act as a sub-custodian in the bank's case and an execution platform, or you can do an integration or a white labeling. So that whole, we should talk more about the fact that we can white label solutions.
Yeah. Are you able to disclose different platforms that you guys help power on the B2B infrastructure side? SoFi and Revolut are two notable names that I think a lot of people would recognize, but we have about, in my sort of finance lingo, we have 50 introducing brokers in the platform. So I think the high level here is that if institutions want to buy and hold crypto directly, they can come to us for that. If instead they want to give their end customers the ability to participate in crypto, we can facilitate that. 3 more points. We've got the biggest finish that top 10. I know we only got through 6 or 7. So
we had the biggest balance sheet in the world, and we were in the space rather, but we put it to work on behalf of clients, and so we provide true credit intermediation. So we'll talk more about that later as well. 9, I think we're the best long-term partner. So what I've learned is this space moves fast. And so, generic Bitcoin custody today might be something else, in the future. And I think you want to make a long-term investment in a partner that's going to evolve and stay in the forefront of innovation. And 10, I know, long time getting here, we make it easy. And we've got all the available resources to handhold, to give white glove service, to give education. And so we're really enthusiastic about welcoming, new players in the space.
Yeah, man, I think, again, for us, we're customers of your trading platform. And I think for us, as we were diving into the Bitcoin ecosystem, we were evaluating different players and we were pitched certain things by different groups. We didn't, at the time when we were starting our due diligence process, we weren't fully aware of the institutional capabilities at Coinbase. And so it's been an eye-opening journey for us to see just what you guys have built, the scale of what you built. And then also the most important questions we get from our customers are around trust, security, and insurance. As you mentioned, the largest insurance policy, some of the best cybersecurity capabilities, and the fact that you're a public company, the level of scrutiny that goes into all that is also enhanced relative to some other companies that are private in the space. I want to talk about Bitcoin and crypto. I think, as we mentioned in the open at Barclays, you helped pioneer a digital bank prototype. And you started doing a lot of due diligence on the asset class in 2017, 2018, as many people did, as it sort of burst into the public consciousness with that first rally to about $20,000. I'm talking about Bitcoin in that regard. But how, in your view, has the cryptocurrency market evolved, and how is it different today than it was in 2017, 2018?
So if I were, a ton has changed, but if I put my finger on just one thing and point to it, I'd say custody. So custody and settlement, I think they're really important things. And so I think that was the linchpin, and having a regulated, qualified custodian. So now that that's there are lots of different ways that you can buy. There's lots of different ways you can sell. You can do interesting things, that you can run bots. You can do tons of different things to participate in buying and selling. But if you can't store it safely, and if you can't, sort of have the complexity of storing your own sort of private keys abstracted away, it becomes really, really difficult. So I think the Coinbase custody solution that abstracts away a lot of the difficulty in engaging with digital assets, I think was the breakthrough. Now, on top of that, we can layer on the trading platform, financing, and all the things that people that trade asset classes like equities and FX and others that have grown accustomed to.
Right. And in terms of the institutionalization of the asset class, something that we've talked about, we think it's going to be a big price driver and eventually a dampener of volatility as more strong long-term hands start buying Bitcoin and other digital assets. But from what segments of the institutional market are you seeing the biggest uptick in interest? You talked about the fact that you guys are discreet. You don't have to necessarily name names, although there's been leaks over the last 6 to 12 months about big insurance companies, endowments that have bought into Bitcoin without publicly disclosing it. But from what segments of that institutional world are you seeing the most interest?
So early adopters were pensions and endowments. They've, I would say, in some sense, long been in this space, but there's an increasingly larger deployment of capital coming, from them. When I think about hedge funds, in particular, macro hedge funds and multi-strat hedge funds, and so probably the biggest new entrant over the course of the past 9 months has been macro funds, really scaling up their activity. I've also seen some equity funds and credit funds starting to enter the space, along with systematic as well. 3, I would say you've seen it reported that U.S. banks are looking to get into the space, perhaps searching for sub-custodial and execution partners. And so I think that banks have concluded that digital assets are part of their future, and I'm seeing an uptick in activity, and I anticipate the fact that we'll have some large U.S. banks trading cryptocurrency before the end of the year. Corporates. So corporates, you've seen the big splash by MSTR. Michael Saylor sort of blazed the trail there, and we've had a lot of fast follows. When I think about corporates, that arrive on our doorstep, they talk about it in 2 ways. One is the hard-headed CFO or treasurer who has an obligation to consider what to own in Treasury, and is exploring the idea of owning a pretty significant chunk of Bitcoin. So that's one way that I meet corporates. The other way is a corporate who says, you know what, I think this digital economy is really going to happen. I need to position my firm to participate in commerce, payroll. And as a consequence of conducting those activities, we're going to wind up having a bit of Bitcoin and or other cryptocurrencies. And so we're not going to make a giant splash in terms of our treasury allocation, but we do want to position the firm to participate in the space going forward. So corporates, who have I left out? So family offices and foundations have been involved, and increasingly more insurance companies. So I had a pretty memorable experience with an insurance company and its top leadership a couple of weeks ago, where they actually started the conversation. Instead of asking me what we could offer, they said, we've thought through 10 or 11 different use cases for stablecoin. And so we thought about accepting premiums in USDC. We're talking about paying out after cat bond events in USDC, and a whole myriad of other sort of use cases around payments. And then, of course, we've got that large sort of last bucket, which is introducing brokers. And I scope in FinTech platforms and PayPals and all sorts of brokerages and challenger banks, et cetera. And that's the world that I'm also running hard after, where I hope that they'll adopt some of the infrastructure that we can provide them to power those flows.
Yeah, I mean, you've seen places like PayPal, Venmo, SoFi introduced it as they sort of build out their suite, full suite of financial services. Are there others that you're, in contact with that you think that all these neobank digital banks and even traditional banks are going to eventually all onboard crypto capability, or do you think that's several years down the line?
It feels like a mega trend, doesn't it? I mean, it's happening across. As I rattle through those different client segments, there's not really a segment that I think is sleeping. I mean, right. I didn't get to asset managers yet, but we haven't seen a Wellington, a Vanguard, enter the space. But who knows? I feel like they're slow-moving giants, but the space also is lacking. From my perspective, it's lacking a full suite of competing sort of options for not just we'll get to ETFs, and hopefully one day soon they're coming. But I do also think that funds that can create structured products, so that they have sort of capped downsides and custom payouts, I think is also coming soon.
So let's talk about that ETF question. So there's a variety of different views. Our sort of base case view, based on conversations we've had with former officials, and not necessarily people that are directly involved in the decision-making process, but who have knowledge of the way these type of organizations and departments in government think, who think that maybe we'll get an ETF by the end of 2021, late 2021 is sort of our base case. Do you agree with that? And what are the implications if we do get the approval of an ETF or several ETFs on the business at Coinbase, and what will continue to be the differentiator that you guys offer in terms of people that are looking to transact in the space?
I don't have any insight in terms of whether it'll be this year or next year or even the year after. I do feel that the marketplace wants one, and I feel like the backdrop, or at least I think it's constructive. And so when I reflect about the sort of cascade of events that happened this year, which in part were led by the OCC allowing lifting the prohibition on banks to custody digital assets, and allowing PayPal, a non-depository institution, to enter the space. I think it sort of points in the right direction. So I can't be more specific on timing, but
right.
I do think that will come. And with respect to what happens at that moment, I think it's just another way for mass adoption and participation in the space. It's kind of easy to buy a ticker if you don't want to open a Coinbase account, which, by the way, is super easy as well.
Yeah, and an interesting thing that we saw Jay Clayton, the former SEC chairman, joined the board of One River Asset Management, a significant player in the digital asset space. You saw Brian Banks join Binance as the head of their U.S. business as they try to build out a U.S. business. So you're seeing all these former regulators jump into the digital asset space. We find it hard to believe that those types of people would be joining this ecosystem if there wasn't some constructive level of regulation coming down the pike. But also relating to the institutional market, are there certain crypto assets that are dominating your conversations with these institutions? Is it 95% Bitcoin and the other 5% is Ethereum and any other players in the space? Is it 100% Bitcoin? Is it more of a mix? What's that breakdown that you're having in conversations with institutions about crypto assets?
I would say a year ago I started, it was almost 99% Bitcoin for institutions. Through the progression of last year, it's shifted to more 80-20 between the base case for Bitcoin and Ethereum. And then I'd say some of the macro funds have gone outside of the two main liquid and are probably invested in a handful of other currencies. And so there's a pretty quick progression. I think once someone, typically it tends to be Bitcoin as their first investment, and then it feels like Ethereum is on the fast follow.
Yeah, no, that makes a lot of sense. We talked about institutions. So an interesting question that I ask several guests that come on the show are sovereign governments. So there's been reports that Temasek, which is a sovereign wealth fund based in Singapore, is potentially already been buying Bitcoin on its balance sheet or in its portfolio, and suggestion by sort of Bitcoin maximalists that an ultimate late part of the cycle, the super cycle that we're in, is when sovereign governments think that they need to own Bitcoin on their own balance sheets as a long-term store of value. Have you seen any interest from sovereign governments, or do you think that's somewhere that we're headed?
So 85 different central banks around the world are doing some sort of exploratory work on having digital currencies. And so I think you can read a little bit into the psyche of sovereigns through that. I do think it's a natural next progression for sovereigns that are heavily invested in natural resources or financial assets of any type to really begin to consider, Bitcoin as a long-term store of value. So I think it's in scope, and I wouldn't be surprised if we had sovereign participation sometime soon.
So you were at Barclays. Before that, you were at JP Morgan. As we've talked about in this episode, you experienced what financial system 1.0 looked like. And now you're on the other side of it, where you started to sort of blend those two worlds in the later stages of your time at Barclays, but now you're fully in the digital asset world. From your seat today, how much is traditional finance or finance 1.0 going to be disrupted by DeFi, by crypto assets, by blockchain technology? And what does that ecosystem ultimately look like? Let's go, say, 5 to 10 years down the line. Are those banks going to be fully disintermediated and they're going to have to either merge or acquire with digital asset companies or be left behind? What does that world look like if you look 5 to 10 years down the road?
That's a big question. The person with the crystal ball at Coinbase is our founder, Brian Armstrong. So I can only see out into the future, maybe 6 months, maybe 18 months at best. So he's really the best person to talk through DeFi. But before I answer the question, I just want to widen the aperture a little bit. And I want to move it away from Bitcoin and Ethereum, and I want to talk about digital assets. So if we talk about digital assets, when we do that, I begin to think about tokenization of financial and physical assets, right? And so we're talking about engaging with assets other than those two, including stablecoins. And when you do that, all of a sudden you sort of set the expectation to say, okay, well, hang on a second. You've got banks that they do make massive payments. They move money around the world. They trade financial securities. They trade physical securities. They do all these different things. And so I think it's just a natural and obvious progression for them to be able to transact in digital assets. I don't think it's about one disintermediating the other. I think right now we're in this sort of parabolic growth phase of having all sorts of institutions have the native capability to actually transact, conduct business, commerce, payments, and other forms of lending with digital assets. And so I think that's where we're headed. I'm minded to make as many partnerships with banks, private banks, market counterparties, everyone to grow what we call the crypto economy.
Right. And people are going to hear some nice barking from my dog in the background here, so just don't mind that. But do you think the Coinbase, to the extent you're able to talk about the direct listing, did that serve as validation for the digital assets world? How do you think in a post-Coinbase being public world, people are looking at digital assets any differently than they were before?
I certainly hope it's another important step of establishing the crypto economy and having validation for this as an asset class. And so, I mean, everything that I see, and it's not just the direct public listing by itself, it's everything else. And so again, if I reflect about the who's who in digital assets these days in cryptocurrencies, it's sort of everyone. And so, yes, I think it's a moment of validation and for the industry. And it should just help to fuel further adoption.
A couple more questions before we let you go. Talk more about that B2B crypto infrastructure. How are you guys, when did that side of the business start? How are you supporting those institutions as they build out their crypto capabilities? And how big a part of that, of the Coinbase business do you think that'll be in the coming years?
So we've been powering, well, again, my terminology here, introducing brokers, which is anyone for whom we help their end customers participate. And so, white label and or other things. So I think over time, it'll be an increasing focus, but it's important to have, each person or institution have the ability to hold crypto directly through us and also find, other avenues. And so it's a pretty bespoke integration that, or at least can be. And so you'll have firms that may want to design the specific customer experience they want for their end client. And we can figure out, interesting ways to help them achieve it. And so I think over time, it'll be an increasing focus for the firm.
In terms of the details around everything you guys do on the prime broking side, could you go more in depth about all the different types of services you offer? Going a little more inside baseball here for maybe macro funds that might be interested in using Coinbase.
Yeah, sure. So let's talk a little bit about the trading platform, because I think it's pretty differentiated. So we have smart order routing, we have algorithmic execution. I think everyone pretty much knows what those are. I would define us by saying that we're agency only on the institutional platform. So that is to say, if you're trading through our prime broker, I don't have a competing market maker desk with FLO. So pure agency. Because institutions can trade, through our trading platform with these phenomenal volume, you have an API integration, a fixed integration. You could have it on your desktop. You could call my OTC desk. So lots of different ways to initiate trading. When that happens, when I said we have a big balance sheet and we're putting it to work on behalf of customers. So what that means is when someone's doing their first trade, they might wire $1 billion, over to us that's sitting in a bank account. And then if they're initiating a big purchase of, let's say, Bitcoin, what happens is they're actually directing the working capital from our trading entity. And so it's that working capital that's going out to 12 different venues and getting the best possible price of Bitcoin in that millisecond. And so that's where I talk about the intermediation. So if by chance there was something that went wrong operationally or otherwise on someone else's exchange at the time, then that institutional client wouldn't suffer loss. So that's a really, really big deal. And I think it's a differentiating factor. There are other smart order routing platforms, but none of which I think afford the protection that we can give in the way that I just described. A couple more things there. We trade in an omnibus in all the exchanges. And so, that like, the more you trade, the less your fees are. And we pass that straight through to our end clients. And so that's super important. And then we give post-trade transparency. And so you'll see, and I know you've experienced it, it's pretty cool. You get a post-trade report and you'll see exactly how the algos performed and what all the mini fills were. Another differentiating factor is, how do you get billion-dollar, multi-billion-dollar trades done in a marketplace which still trades pretty much like retail? And so the answer to that is, again, the trading platform. So we can be thoughtful. So if you were to engage and want to buy, $1 billion on a Friday afternoon, we'd have a huddle with my trading team. We'd go through it. We look at market conditions. We make some recommendations on how to layer in some TWAPs. We might consider putting some dip catchers in there. So if we get this big move that we saw, on Saturday night, we can be opportunistic and sort of fill our boots at the time. And then we begin to sort of work around the clock 24/7. And so every 4 to 6 hours, we get a report, we do a settlement, we would assess the market conditions, we go faster, we go slower. It's actually, I know you've seen it in action, but some of your viewers haven't, but it's literally poetry in motion. My partner, Greg,
it's fascinating. Yeah. Yeah. And as you mentioned, even I think in Asia, from people we've talked to who do on-chain analysis, there's a lot more leverage in the system among Bitcoin buyers in Asia. So you see the market oftentimes move overnight more significantly than it does during regular trading hours in the US. And I think it's one of the things that's fascinating around Bitcoin is that the idea that financial markets only trade during certain hours is if you think about it, a little bit strange. The fact that there's not constant price discovery taking place in markets. And you guys obviously do a good job of staying plugged in around the clock to get the best prices for your customers. In terms of, yeah, go ahead, Brett.
I was just saying, what else is strange is so pivoting from the market opens, the market closes. It's running a 24/7 trading operation in perpetuity. And so you mentioned Eric Peters earlier from One River. He actually did a sort of tested us in a memorable moment where he wanted to see if it really was 24/7. And he put in a giant sort of series of orders and requests on Thanksgiving morning. So when people were traveling to see, and anyway, long story short, there we did deliver, got everything done, and it sort of tested the limits of what 24/7 really meant.
Right. Yeah. Bitcoin never sleeps. Eric Peters is a brilliant guy. We always compile sort of a handful of the best written materials around Bitcoin, and his initial letter to investors, as I think in the Hall of Fame of top macro cases for Bitcoin. So I would encourage everybody to read that. Last question I have for you. What stage, I hate using the tired baseball analogy of what inning are we in? Are we in the third inning, the bottom of the second, whatever it may be? But you talked about how there's still a large number of institutions that are either performing due diligence or are currently invested in Bitcoin that we're not even aware of. What level of penetration and saturation within the institutional world do you expect to see, let's say, in the next 12 to 18 months relative to where we are now? Are we seeing a ton of people that are currently invested? Are we seeing more people that are in the due diligence phase? Are we seeing more people that are now just becoming crypto curious? Where do you think things are going to move in the next year to year and a half?
So if I reflect on 25 years of bringing new asset classes to institutional investors, and I think about exotic rates, I think about credit derivatives, I think about leverage structured products, and I think about the cycle of adoption. It seems like it's about 3 to 5 years, right? If you're going full speed. And so it starts with niche players, it works its way up to medium size, then eventually there's adoption at the top. What happened in this past year is just phenomenal. So what happened is we sort of skipped a few years and we went straight to the 5th year.
I was going to say, when does the clock start? Did it start in 2017? Did it start on April 20th of 2020 when Brett Tejpaul joined Coinbase, or when did it start?
I don't know where the start is, because there's a lot of, I owe a lot to everyone that came before me to set this wonderful stage, wonderful business up. But all I can tell you is that it's gone from fringe players, that sort of what I described that first kind of 2 years in my mind on adoption, straight to the almost the sort of 4th or 5th sort of year where you've got full scale adoption. And so right now, I don't see anything that's going to come in between, that's going to prevent that full scale adoption from happening. I mean, usually, again, you have clusters of activity here. It's hedge funds, it's alternative asset managers, it's family offices, but it's not banks, and it's not the biggest funds. But now everyone's looking at it and minded, I think, to deploy capital in the space. And so I don't know. It just feels like if we continue at this pace, we're going to see adoption, full scale adoption, sooner than we think.
Right. Well, Brett, it's been a pleasure to have you here on Salt Talks. We're very happy customers and partners of Coinbase. Look forward to having you guys also involved in our SALT conference in September as well. Helping to institutionalize the asset class and educate people that still might be on the skeptical end of the spectrum, which, to be honest with you, I was for several years. But as we've dug deeper into it, it's sort of hard to argue with the inevitability of digital assets and just the sort of reframing of our entire financial system. But thanks so much for joining us.
Thanks, John. It's awesome.
And thank you, everybody, for tuning in to today's SALT Talk with Brett Tejpaul from Coinbase. Again, we love educating people in our community, either that already know a lot about digital assets or are just getting started on that intellectual journey. Just a reminder, if you missed any part of this talk or any of our previous talks, including a whole series we've done, probably 20 or 30 now on the digital asset space, you can access them on our website at salt.org/talks and on our YouTube channel, which is called SaltTube. We're also on social media. On Twitter is where we're most active at SALT Conference, but we're also on LinkedIn, Instagram, and Facebook if you're so inclined to follow us. And please spread the word again about these SALT Talks, especially I think it's important to educate people on what's happening in the digital asset space. If you have an institution that's becoming crypto curious, we'll feel free to pass along Brett's email to you, and he can answer all your questions on that front. But on behalf of the entire SALT production team here behind the scenes, as well as myself, signing off here from SALT Talks for today, we hope to see you back here again soon.